You're watching today's Daily Market Comment here at xm.com by Haralan Buspisuros. I'm Christina Marujas. The US dollar outperformed every other major currency on Tuesday and continued to gain against most of them today as well. The person responsible for the dollar's rally was Fed Chair Jerome Powell, who at his testimony before the Senate Banking Committee of the US Congress said that the Fed may need to raise rates more than expected and will stand ready to move in larger steps if incoming data warrant tougher action to bring inflation to heel. Investors increased their Fed hike bets, and the probability for a 50 basis points hike at the upcoming gathering has climbed to 70%, while the level where they expect interest rates to peak was pushed up to 5.65%. However, the massive increase in Fed hike expectations also heightens the downside risk. Ahead of the next meeting, investors will have to digest the employment report and the CPI numbers for February, due out on Friday and next Tuesday, respectively. Negative surprises in these data sets could well hurt the greenback. Although the dollar gained against all its major peers yesterday, it is hard to envision strong and lasting gains against some of them, one being the euro. Market participants are still expecting the European Central Bank to deliver another 165 basis points worth of rate increments by the end of the year. Therefore, the outlook for euro-dollar remains somewhat blurry despite yesterday's slide. Maybe the dollar will perform much better against the risk-linked currencies, as increasing hike expectations have been weighing on risk sentiment lately. With a slowdown in Canada's inflation for January and the disappointing GDP data for Q4 cementing expectations that the Bank of Canada may refrain from hiking today, the Loonie may be the better choice. Investors are pricing in one more 25 basis points hike by the Bank of Canada until the end of the year, and thus the Loonie could come under instant pressure today if officials stand pat and signal that they will likely stay sidelined for the rest of the year unless economic data points otherwise. Equities around the globe tumbled after Powell's hawkish remarks, with Wall Street's main indices falling more than 1% each on fears that higher interest rates will dent profitability and valuations of firms as well as the U.S. economy as a whole. Gold erased almost all the recovery it staged since February 28th. The precious metal is still holding above the 200-day exponential moving average, but a clear dip beneath it could invite more bears into the action. Thank you for watching today's Daily Market Comment here at xm.com.